All right. We are live. This is Tim Trades NASDAQ Futures live. Today is Wednesday, October 22nd, 6:25 a.m. We're going to be taking a trade in about 4 to 5 minutes. We are on Apex Trader Funding. I have a 50K account, pretty much at break even. And doing the wealth charts. Excuse me. We are going to be doing scalping 35 points, 35 point stop loss, 35 point take profit. We have Tradingview. We're on the 1 second time frame. The volatility is 22, so a little bit down, which I think I like it a little bit down. I like it in the 20s or in the low 20s or just below. Use code TIM at apextraderfunding.com to get the best discount always. Two minutes until the market opens. We're pretty much trading bear flags, bull flags. We're on the 1 second time frame. I took an indicator, tweaked it, changed some specifications, and that's what we'll be using for today. One minute to market open. We'll be looking for the indicator on the left with Tradingview. It'll print a green line if it closes above the green line, in addition to meeting a volume criteria. It will show an indication to go long. If there's a dotted red line, if it closes below that dotted line with some additional specifications of volume, we'll go short. Market opens in 10 seconds. And the market is open. Price starts moving right away. going down about 20 points. There's a green line that just printed up high. $25,271.5 is the go long point with additional volume specifications. So it's not just a no-brainer go long. Market continues down. Ideally, what I would see is a pullback to the upside and then a continuation to the downside to keep the trend open. Okay, there's the red line. If it closed below that red line, 25 to 11.75, it has to close below that line plus meet a volume specification before it prints the indication to go short. (6:32 a.m.), 2 minutes after the market's open. Okay, looks like it might be continuing down here. Okay, we're going short. We are in short. We're in drawdown. We need to push down. Yeah, I didn't like the pullback. Pullback wasn't significant. I need to change the noise it makes when I enter a trade. It sounds like an error occurred. Bong. It should be like ding, or something a little more joyful. Okay, we're in the money. It's pushing down. We're about 250 in the money, 300 in the money. $400 in the money. Another push down. 500. 700 is the goal. Going for 35 points. Come on. Need another push down. Push me down. Push me down. Tempted to move to in profit. Another push down. Come on. 600 in the money. Need it. Another 5 points. Come on. Push down. It's torture. One more push down. Push it. Push it. Down. Drop it. There we go. Got it. Torture. Okay, now we're positive 694 in the count. Finally positive. So we just need that was brutal. Brutally long. But we got it. Brutal. So we got it. We got it. So it's pretty much like the 30-second time frame that we were playing here. If you're looking for another trade, here's another one. Continuations here. I would imagine we have a little bit higher of a pullback. Who knows? We're at all-time highs yet? Back again? Let's see. Day chart. No. Not at all-time highs again. Yet. Let's just do a yellow. Let's do a top line here. There's all-time highs. 25,412. Boom. Look how I respect that trend line. See, I didn't put that. Kind of a channel we might be coming into. If it breaks the channel, we're getting out. So the strategy is mainly a bull flag, bear flag. This is a bear flag. Bear is going down. You have a swing high. It prints that after 2 bars. Now you have your top trend line. Swing low. You get your bottom trend line. Ideally, we would wait for some more confirmation here, but because the market's just pushing down, it's dumping. Okay, so here's the, I was expecting a little bit more of a pullback, and we're getting it. Because it was kind of overextended. Just went straight down. Those sellers took their profit, and now it caused liquidity to the, and/or took the pressure off of the buyers and driving prices up. That's a lot of money right there. Let's see. Okay, here's the entry. And there's the exit. We only really had about 13 points, less than 15 points of drawdown. So less than half of what we could have tolerated. That's good. What's kind of scary is taking, what the heck, the market's moving. If we were to have, once it gets like to this territory here, and then if it would have moved back, that's when I was like, you know what, I probably should move it to in profit. Once it's in like this area here, I should probably, like once it broke down here and started to pull back, I should have probably moved it to in profit, break even, so that one, you still make a little bit of money, but you also don't go into drawdown, because it's $700, because this is a trailing drawdown. So if you go $600 into profit and then back down to square one, that's $600 of drawdown. And if you suffer more drawdown here, then you could potentially go down into like $1,300 of drawdown, and now you just killed more than half of your overall drawdown. And if you do that 2 days in a row, you only suffer 2 losses, but it's 2 days of massive run up and drawdown. Okay, curious to see how this lines up on the 30-second time frame, and yep, look at that. Perfectly lined up right when I would have, if I was just trading the 30-second time frame, right there at the break. It's actually right before the break. Well, I guess it broke a little bit. That's the entry point. Pulled back, dumped down. So that's pretty cool that it lined up. Multiple time frame confirmation is huge, because you have traders that like to trade on specific time frames, and so the more time frames that line up with your trade, the more traders that are involved, the more likely it'll play out. Typically just a one and done trader. So like, comment, subscribe, hit the thumbs up button, hit that like button, comment, subscribe, use code TIM at apextraderfunding.com to get the best discount possible. Not selling a course, no smoke and mirrors, super transparent. You can look at all my videos. This summer, I cashed out roughly $8,000 worth of Apex Trader funding, cash in my pocket, and so we had a good summer run. The market has changed. I had to tweak my strategy because it stopped working, different market conditions. So now I'm tuned into this one, which actually would have been better and would have still been winning this summer. So I'm kind of bummed I didn't use these settings during the summer. So this strategy is, oh, that's weird. It's the last 2 days are winning days, is that right? Yesterday? Yeah, that's right. So if I would have been trading this strategy since August 21st, takes one trade a day. It's either winning 700 or losing 700. By the time we get to today's point, would have won almost $12,000. So if you consider 3,000 of that is passing the evaluation, and then the rest of it is money that potentially draw down. So 11, that's 11,000, yeah, almost 12,000 minus 3,000, so almost $9,000 in profit in the last 2 months. It's an extra $4,400, extra $4,000 a month. That's just one contract, one 50K account. I mean, if you get times 20, I'm looking at almost $90,000 a month times 2, $178,000 in 2 months. A comfortable year's worth of working 40 to 50 hours a week. Or some people never make that much money, so raking in the doula. All right, so join me here tomorrow. Oh, here we go. can you explain your strategy again? I'm trying to be more consistent. All right. So in order to be consistent, you have to have very specific, and a way to take away the stress too, and the prevent you from over trading. You have to have a very specific entry points, right? Very specific strategy, and you only take trades that meet those. Music is horrible. Only take trades that meet that specific strategy. So recently it looks like the 30-second time frame has been hitting good. So you got a 30-second time frame. Where's the market open here? There's the market open. So for this strategy that I use, the swing high. So you're going to go to your indicators up here. You're going to type in SHSL. Let's see what pops up. SHSL. There we go. Swing high, swing low, version 2 by Satoshi Yoshi. Okay, once that's on your chart, the settings I think are standard. Volatility threshold in pips is 10. Don't know if that matters because I don't have it set for volatility threshold. Style doesn't matter. That's just the appearance. Visibility. I think this is all standard. So you get the mark. So you don't look at any of these other. Oh, let me make myself smaller here. You're not going to look at any of these other swing high, swing lows before the market opens. You're going to wait for the market to open, which is right here, 6:30 a.m. Wait for it. You're going to feel like you're missing out because the market's going to move. But you're going to have patience. You're going to sit there, wait for it to print these swing highs and these swing lows. Once it prints a swing, say in this instance, it was a short position, a bear flag. It's going to swing high, swing low. You got the top of the trend line here, bottom of the trend line there, and then it's going to have another pullback, swing high. So then you're going to connect these two lines. This is a pretty steep, so I would have hoped that it would have been a little bit more of a pullback here, but because there's so much momentum, then it's pretty biased to the downside. And then ideally there would be a little bit more formation here, like maybe another swing low here, so that this trend line would be, you know, a little more of a 45-degree angle or so. But there was some consolidation here happening. And so you see this in this specific instance, you kind of have a channel kind of formed here. See the channel here. So in this instance, push down, kind of pull back. We did get the swing high indication here, so that's good. You're going to count 2 after the swing high, and that kind of solidifies the trend there. After the swing, when it printed the swing low here, you're also going to count 2, 1, 2. That also acts as the swing high. So then we count 2 more, and then that puts us down here. So the break, pretty much the break of this swing low is the entry point. Typically, I like to wait for the break to close, which means the candle closes after the breaking trend line point. But sometimes when the market's moving so fast, you can't wait for the close, because look at this huge, look at all this move we would have missed. I trade with 35-point stop loss, just because after back testing, most of the time you don't suffer 35 points. And look at that, it would have been perfect amount if you would have entered at the close, but you could not have taken 35 points of profit. It didn't get to 35 points of profit. So sometimes if I want to be more consistent, don't go for 35 points, just go for like 10 points. Still keep your 35-point stop loss, but if you're just taking 10 points, yes, it's not a 1-to-1 risk to reward ratio, but your winning percentage will be higher. The thing that stinks is for every losing trade, it's going to take you 3 trades to make up for 1 losing trade. But your winning percentage will be higher, so your confidence will be higher, consistency will be higher. But if you would have played the break right here like I did, then your entry point would have been way back here. Could have still gone for that 35, take profit, which we did. And then our 35-point stop loss would have been way up here. So we didn't even come close to the 35 points stop loss. And that's the trade I took for today. If you were still trading after that, then you look at these points here, say, okay, we have another swing low here. We move, and then we have a swing high. We move this, count 2, 2 after the swing high. Set that trend line there, and then once it breaks this, which it broke it right here, it's still pretty bearish right here, so it's hard to go long right here. Could have gone long right here and just gone to the moon. Could have gone almost 100 points or what. Is the market still going up? Yeah, the market's still going up. So, but that's like catching the bottom. That's hard to do with confidence. I mean, look at that. It got up to almost 94 points. Typically, you wait for further confirmation, which means it breaks the trend. So it doesn't technically break the trend here. It has to clear these 2 swing lows. Ideally, clear this up here. So potentially, you're not really clear until this point here. And so but that would have been a false breakout because now we're in drawdown. So that's why I always say the first couple trades of the day are the best trades. So that's why I'll just get the first trade. And that's another thing for consistency. Set a limit of how many trades you're going to take a day. I try to just take 1 trade a day. That's it. Just 1 trade, whether it's a winner or a loser. It puts a lot of pressure on that 1 trade, but that's also why I took an indicator. So you could take any of these indicators. So this is the swing. This is a swing low, swing high indicator. You have a little bracket here. The little bracket shows the, this specific one is private. You have to find an indicator that's not private. Let's see. Here's a tweezer top. Should be a tweezer bottom too. Double top, long only. So there's this double bottom strategy, long only. So a lot of people say when there's a double bottom, it's like a resistance, and so it's going to be like a sign of a reversal. Well, I took the indicator, the double bottom indicator, put it into Grok and had it switch it to a strategy. And this is that strategy. So it's 75% win rate. Pretty good. Drawdown's only $1,300. Take profit is only $900. So it's good strategy. It just doesn't. That's 7 days. Let's see here. Okay, geez Louise. Okay, so that's pretty amazing. So this right here is a 91% win rate. And I just took an indicator, had AI turn it into a strategy, and then you can add some other specifications. I don't think I even had it limit how many trades it took. It just, so this is kind of excessive trades. And the crazy thing about this is you don't know when it's gonna signal. Like, let's see what time of day. And these are kind of small trades, 55, 115, 45, 75, $20. This is taking small trades. So it's like a scalping the market pretty much. But see here, this is at 3 a.m. 11, 3 p.m., 7 p.m., 5 p.m., 2 a.m. So see, they're just odd hours of the day. 11 p.m., 4 p.m. So these are just odd times of the day. It's taking trades whenever it meets the criteria. But I mean, if you just want to hop on the computer and see if there's any trades and just wait for this, an indicator like this to hit and then take that trade, that's doable too. If you don't want to trade first thing in the morning, the futures markets are open 23 hours a day. 5.5 days a week. The futures market's actually open Sunday afternoon. FYI. But yeah, that's helped me be more consistent, is taking a strategy or an indicator that I like, that I understand somewhat, and then turning it into a strategy, tweaking it, adding some special criteria here and there, and then just using that as a ride or die indicator. So I'm seeing that there's a back history here. So there's a 91% chance of winning for this strategy. So I'm just gonna be patient and wait for these setups. I like to trade first thing in the mornings because I don't like to be at the computer all day long or whatever, but Here's another strategy I have. Another thing, when you're looking for strategies, you have to go through different time frames, right? So this is a 30-second time frame for the that tweezer top, tweezer bottom strategy. That was on the 30-second time frame. But if you, in this one, it's a different strategy on the same time frame, and it's horrible. But if you switch the time frame, let's see what happens. Look at that, just switch the time frame, and boom, $27,000 in the profit. Only 43% win rate. Problem here is the drawdown. With Apex, you can only have $2,500 worth of drawdown. So this would not be a good Apex. But potentially, if you had these going on a private account, and if you could suffer that much drawdown, you're still profitable. Yeah, some of these, the time frame on any strategy, the time frame makes a pretty big difference. Let's see what the 5-minute looks like for this. This is called the ATR strategy. Yeah, it's worse. Really bad on the 1 second. So anyways, you just gotta experiment with those different indicators. Yippity dippity dippity doo. Some of these have winning percentage, but a losing profit, because the profit factor has to be over 1. Excuse me. So you see here, it's like, oh, the profit factor's 2. Oh, 84%, that's great. Only 1 trade a day, that's great, I like that. Oh, the max equity drawdown, 3,200, almost 3,300. Can't do that with Apex unless you're trading a bigger than 50K account. If you're trading bigger than a 50K account, then your drawdown versus take profit becomes way less than 1-to-1 and really hard to pass unless you're just YOLOing it. Plus, for 2 months, you're only making 4,300. Ideally, this needs to be 6,000 so that by the end of the 2nd month, you're getting a payout from Apex. You're welcome. Is it Kyrie? Sorry, I don't know how to pronounce your name. It's a cool looking name. Kiri. Yeah, I find that Grok AI, it's free, I think, but has the best coding. I'm not a coder, so I don't really get into the deepness of it, but we just copy and paste the script of it. So you have Pine Editor. So what you would do is pick an indicator. Here's VWAP. This is the VWAP indicator. And you just copy, command all, select all of that, copy it, and then paste it into Grok and say, turn this Tradingview indicator into a strategy. And you can even ask Grok for recommendations on different filters to add to it to increase the win rate. And it'll give you some suggestions. I typically like to do, set how many trades per day it will take, and then also have the ability to specify at what time of day it starts looking for a trade, and what time of day it stops looking for a trade, so that I set it for market open, ideally, or whatever time of day you want to hone in on. And that way you can make it the whole day or part of the day, and any part of the day that you want to look for trades. And then just add specifications from there. You can even add multiple indicators together for multiple reinforcement of the trades. The more specifications, the more specific it is, the less trades it'll probably trigger, but potentially the higher percentage rate you'll have. Yes and no. But that way you'll have your own specific indicator with your own strategy. Or even if you have a strategy you want to incorporate in there. You can even do chart patterns, do the double top, double bottom, bear flag, bull flag, W, M, the popular patterns to look for. You can even incorporate those into the strategy. It should also be able to look at multiple time frames for different confluence, I think. I don't know. I used to work with a Fiverr programmer who I would pay him like a couple $100, and he would program some strategies that I wanted to have programmed. But then AI got really good, and I didn't need him anymore because AI got so good with the prompts and the revisions. And if AI makes a mistake, if the strategy doesn't work right away, or the indicator doesn't work, then you just copy and paste the error code that comes up, and then tell Grok, hey, this is the error code, can you fix it? And it goes at it. All right. See you guys tomorrow. Like, comment, subscribe. Peace.